Hello, hello, hello. Welcome to our stock trades. In this video, we're going to go ahead and talk about Chamath's 30-day wash rule. So I wanted to preface this. A couple days ago, I made a video about the earnings for Clover, and I find interesting. I actually thought the earnings were today. For some reason, my mind wants our life to go by faster, and my assumption was, the 7th of November was on Monday, right? Because don't you realize that usually in the beginning of the months, it goes by so fast that it's already the 7th, right? So this is good. I see Chamath's plan right now, and I want us to hyper focus on this, okay? So this is, by the way, yes, good morning, good morning. So this is the SEC filing for Clover Health regarding Chamath Palihapitiya cell. Okay, let me go ahead and then this is for the hospital here. I gotta delete that there. So let me just show you where I access this here. So if you go to our brain machine and open up the help and go to stock fundamentals and then go to the SEC filings and type in the ticker symbol CLOV, what you will see here, and if we could just kind of grate in it, and if you do the first one here, the SEC 13D, and then you click on this link here, you can see from this particular region, Chamath Palihapitiya, these are the numbers here. Okay, so you can get it directly from our brain machine, but I just put the picture down here below. If you can go to Clover, there it is. So I want us to follow the dates here. September 27th, he sold 284,000 shares. To the 28th of September, 1.7 million. 28th, another 1.7 million. 29, 1.4 million. September 30th, 1.9 million. October 30th, 867,000. And then October 3rd, 3.2 million. Okay, so on average, if you we have the stock calculator here. If you take all of his shares that Chamath Palihapitiya bought, and if you average them out, shares sold, his average break even price in terms of his shares is $1.77. So $1.77. Okay, so yet last week on the All In podcast, he probably hates me doing this, by the way. He probably hates me doing this. I tell you this. You know what I mean? He's like, God dang it. but luckily, my audience is very limited to a small group of people. So some folks are not going to understand this. But within the IRS, you have something called a wash sale rule. So I posted this on our private stock group here. So a wash sale rule, it's IRS law here that you cannot claim a loss on a stock within 30 days. It has to be after the 30-day mark. So I would say we should be expecting to see Chamath Palihapitiya doing some buying and selling. Now it depends. He did kind of fragmentize this type of selling to where he can get in. I don't know if he's going to get in, or he's already gotten in because it's already been 30 days from the first couple of sells. And honestly, a great way to look at this particular, and another reason why he sold specifically, he said these sells disclosed herein were made primarily to allow the recognition of related tax losses. So it's obviously tax loss harvesting, right? But if we were to go to dark pool data, and if we were to just kind of look at Clove here and just see any dark pool data for Clove, we do see around 328 is a lot of. That's just really that's a lot. That's definitely a lot of shares in the dark pool. And during the next couple of days, we're probably going to see more things like that, which is really weird. How much that is. I need to see the ending of that if it's a million, because that's more shares. That's a lot of shares, more so than what is on the free float. So this is interesting. I have to take a little look into this. Seems it adds to the retail thesis of manipulation within the stock. I have to take a look into it, but regardless, you can't manipulate fundamentals. Overall, the overarching theme of that, the price will consolidate to its price value. But just be very cognizant that I believe this week Chamath Palihapitiya is going to buy into Clover and re-solidify this tax loss harvest, and right before earnings. See how that works out for him? He's essentially tax loss harvesting right before the earnings report for Clover. How genius is that? Right? How genius is that? Right? All right. So let's see if that plays out, though. If he was to execute it like this, then very, very you got to give credit when credit's due. Tax loss harvesting is very risky. Okay, so there's that. Another thing I would like us to talk about is first, before we look at the equity hedging index, I want us to take a look at dumb money versus smart money. Very quickly, guys, as you know, this data was created from a former hedge fund. Every time you buy into a Robinhood, Webull, or whatever, TD Ameritrade, you give them your social and you tell them how much money you make, and also they keep track over your trades. That data is obviously valuable. They're able to make money off of that data, and they take that data, excise your name, and just give it to these people like us here, where essentially we'll be able to parcelate you between smart money and dumb money. Smart money are people that have over $100 million. They're great market participants, versus dumb money, they're retail investors. And as you can see right now, stocks are slowly coming back up right now. And dumb money is basically kicking off, ready on firing on all cylinders, while smart money is easing off. Another thing I like to look at is the equity hedging index really tells you that we are nearing a bottom. It's actually a really good indicator. And you can see from a 10-year analysis, you can see the signal only came up a few times. And we are exhibiting this signal. More specifically, if you were to zoom in on the signal, we're actually falling down, which is good, which means that, we are getting ready. Because as it starts going down, you basically start seeing the rise. The question of this matter is this another bear market rally? From my understanding of what the analysis here, and there's just so many hypotheses you can come up with, but the ones that are up at the top of my differential is perhaps maybe we are going to experience a longer maybe bull run at the end half of the year towards the beginning, and then fall into a recession once the Federal Reserve overarches and increases their interest rates. Now, I speculate that the Federal Reserve, once they meet with their FOMC meeting, they are going to be a little bit more hawkish than normal, trying to basically stop this bull market from continuing until inflation is controlled. The other side of the issue is that the economy is on a very teetering land slope here. So the easiest way to chuck this is find companies that have inherent value, calculate their intrinsic value, find out and set price targets, and do these types of movements during these types of markets, which will eventually help you when the market does turn. Okay. So in any case, that's all I have for you guys. If you like what you see and like the content, please consider liking, subscribing, and commenting and sharing. We are issuing a early Black Friday sale with a coupon code down below in our Mastering Stock Market course, which will basically be step-by-step lessons and access to all of our lifetime access of data. And it'll be all down below for more information. Just let me go ahead and run through these comments here real quick. Yeah, something like that. And also, they don't get awarded if the price doesn't go to $25 or $30 for, I believe, 90 consecutive days. Hey, man, that's good. But you know what? Tell me what dumb money is on here right now in the morning listening to this. You're not dumb money, even though in this graph you are. But that's why the best thing, the most greatest investment is in yourself. That one will yield the most, right? Because it'll help you make the correct decisions and panic selling, right? All right. Well, It's a pleasure, honor. I'm going to go to the hospital. God bless you guys.